Oil prices have halved over the last 9 months as supplies grow and the dollar surges. This is starting to cause pain to some OPEC producers. Iraq is said to be racking up debts to oil majors operating in its southern oil fields, according to Reuters, as tumbling prices squeeze revenues. Crescent Petroleum is a privately held oil and gas company that has operated within Iraq for nearly 20 years. The CEO, Majid Jafar, joins us now. Majid, just comment on that report. Is that how it goes?
The issue in Iraq is that the contracts that were signed are effectively service contracts in the south of the country. So they actually have to refund the investment of the big majors who have taken these contracts as they invest, rather than as production grows and revenues grow. So they have the strange situation now where they're trying to discourage investment. But despite the war on ISIS and despite these contracts which aren't really doing the job because there isn't an oil law and an agreement on oil policy, Iraq is at all-time high production of almost 4 million barrels a day, and the potential of up to 10 and 12 million barrels a day has been defined, and the IEA, the producers, OPEC, has predicted 40% of the world growth in oil exports is to come from Iraq in the coming decade. So it's a very important player going forward.
And presumably the major areas of oil development are continuing to be the south of the country, and I'm assuming Kurdistan. Now, those seem to be the two areas which are the growth drivers in Iraqi production.
Yeah, I mean, they are, and they are outside of the current conflict zone, which of course is important. Yes. We have big operations and investments ourselves in the Kurdistan region. We operate the two major gas fields there, and we've invested about $1 billion. But even in the Western Desert, which obviously is inoperable at the moment, there are about 300 undrilled structures, and Iraq is massively underexplored. There's a couple of thousand wells ever been drilled in Iraq, compared to 40,000 in Saudi and 1 million in Texas alone. So it's really because of 30 years of effectively being outside the world industry, there's massive potential there.
So if one assumed, and you can argue this is exceptionally naive, but if you assume political stability, if you assume that ISIS is pushed back, how long would it take Iraq to get to 10 million barrels per day? I agree the potential's there, it's just a question of getting there.
By pushing back ISIS and clearly achieving stability is important, but even more important is getting the right regulatory framework. Getting the oil investment law, recognizing that you need investment-type contracts that are going to align the interests of the investors with the host government, whether it's production sharing contracts or others, it doesn't matter. It doesn't make sense for Iraq to be coughing up money to refund investment, and for oil companies not to be having oil price exposure, which is what they're in the business of. But there is now the new government, there's a little bit more consensus, and getting those policies and laws in place has been an express priority. There's a big conference in London in June to talk about exactly those issues where the oil minister...
This is fascinating because the model from the NOCs has been to take away those reserves from the IOCs. Now, we go back, as you know better than I do, 30, 40 years. It was the IOCs that owned all those reserves, or the majority of the reserves, and gradually over the last few decades, the NOCs have taken them back. The national oil companies, Iran, Iraq, Saudi, etc., etc. So they've got what they wanted now. They haven't given those international oil companies, the Shells, the BPs, the Exxons, exposure to the oil price because they didn't want them to have it. They didn't want exposure to the upside from it as well. So what I'm interested in, and this is something I haven't talked about amidst the whole oil conversation, is are they changing the model to give IOCs back a stake in the underlying?
Yeah, I mean, it's not really about ownership of the reserves. They will remain with the sovereign. The issue is you're bringing in an investor, and you want them to put their best people and management skills, more than money actually, that's the management that matters. Yeah. And you'd rather have 95% of 10 or 12 million barrels a day rather than 100% of 3 or 4 million barrels a day. And getting there, particularly with competing new supplies from US shale and other basins in the world, it matters for a country like Iraq.
But the key question is the cost of production in the Middle East relative to the cost of production from shale in the US or tar sands in Canada. And, you know, if one assumes, I don't know what your cost of production is, but I'm assuming it is exceptionally low, and you contrast that with shale let's say, break even between 40 and 50, tar sands break even around 60.
Maybe, but you don't need to have the same security backup.
Well, that's
for
part of the cost of
pipelines,
production.
whether it be Nigeria, whether it be Iraq, wherever it be. You don't. I mean, just, you're right. The actual price of getting the barrel out of the ground, that's the easy bit for the Middle East. It's the security implications thereafter, isn't it?
The Middle East has half the world's oil and gas and will continue to be a major player going forward. Now, OPEC has effectively handed over the swing producer role, or delegated it, to the US market to self-regulate and because it sees there's no point trying to protect the price for the benefit of shale oil or renewables or other high-cost producers as they see it. But it's going to be very important going forward. Absolutely right, the cost of production is low. Our issues in the Middle East are above the ground. Security, certainly, but also policy and subsidies. I mean, we are the fastest growing market for energy in the region, which is why local players like us focus on meeting domestic needs rather than just export. But tackling subsidies, which destroyed $230 billion of value last year, half the world's energy subsidies were in the Middle East region, is a big issue for producers, for countries like Saudi, but also for consumers. Countries like Egypt, a big source of their deficit is the energy sector.
Absolutely.
It's very interesting, isn't it?
Budget deficit.
But I mean, look at the countries that are having to grapple with these lower prices and how they're responding to it. And we talked yesterday about the Russian energy minister, who's basically come out and said, we are not going to stop production. We are not going to slow production. We expect output for this year will be pretty much as it was for 2014. And yet, you know, there's got to be some pain here on the revenue side for the Russians, but they're just not in a position, in terms of their own budget situation, to slow down at this stage. I mean, this is not a game that is necessarily going to be easily won by the Saudis, is it?
Well, the countries like Saudi and the UAE and Qatar have substantial savings. Saudi can continue current spending levels for 4 or 5 years without any issue. Obviously, countries like Iran and Russia and Iraq, for that matter, it's much more of an issue. And for some other countries, like Turkey, for example, you know, because of the currency issue, the oil price is actually, the energy cost is being masked a little bit by prices in dollars, as you mentioned. So it's not clear. There's a big transfer of wealth, certainly, from this fall, but it's not clear yet who the winners and losers are. And I actually think for the US, the savings aren't being spent yet. Consumers aren't necessarily seeing this as long-term yet, and investors aren't quite seeing it as long-term yet. There's a lot of money that's been raised, and there was a good run for the last 4 years in this sector, and it'll take probably a year to properly adjust, although up to a third of US production could come off the market if prices stay at current levels or below.
Well, I think you've raised a very good point. One's got to make a very clear distinction between where are the hits on revenue, and that's places like Saudi Arabia, like Iraq, because we are now going to, I think, have stable oil prices around current levels. And then you have to say, where are the hits on production? And the production cutbacks are going to be the high-cost producers, like the North Sea, like Alaska, like the tar sands, and the data on the cutbacks in the shale industry are very clear.
Nobody's taken their production off the table yet, ostensibly. We see the rig count, but it's only the small ineffective ones as well. Are we going to have one more shakeout in the oil price before we get a supply response? I mean, the demand response, let's assume it's beginning to happen. It'd be crazy not to happen at $58 a barrel when people are buying X at 110. But what about demand response? We talk about who's going to do it. Well, I haven't seen anyone take a barrel off the table yet.
The supply response.
Who's going to do it? And before they do it, are we going to see one more shakeout in the price?
Well, I think in the US, you know, a lot of these smaller players are heavily leveraged. They have to keep going, or they're going to get taken out. So I don't see, you know, that they're just going to stop producing. But I do think that at current levels, a significant proportion of that production will be coming off the market, because the shale oil is a very different process. It's almost like manufacturing. You've got to be drilling lots of wells continuously, because you've got a very rapid decline rate in the first year. So you're not going to be drilling those wells if you're below your break-even cost.
So one more shakeout beforehand in the price?
Possibly.
Down to?
I won't speculate.
Goldman says $40. Are they wrong?
I think that's probably low. I think you know, and you're seeing a big differential between Brent and West Texas, of course, because of the dynamics in the US. They're not allowing,
now back up to 9.5.
Not allowing export. That's an artificial differential, actually.
Great. We've got to leave it there. That's a shame. I could talk all day about this. Nice to see you again.
Good to see you.
Thanks very much indeed for joining us. Majid Jafar, who is the CEO of Crescent Petroleum. And let's just tell you, coming up on today's show, immediate statement.